welcome to the Deep Dive. So this week you sent over something pretty interesting news about the launch of tokenized U.S. Treasuries.
That's right.
Our mission today is basically to unpack that, figure out what it really means and, why it matters if you're trying to keep up with the big shifts in finance.
Exactly. We're looking at this announcement from Superstate. They've put U.S. Treasuries on-chain, allows you to hold government securities directly on a blockchain.
Okay, right. Tokenized U.S. Treasuries. Let's break that down a bit. What does that actually mean for someone listening?
Okay, so think of it like a digital version, a digital token that represents a real U.S. Treasury bond.
A digital token.
Yeah. Normally, you buy these bonds, maybe in larger amounts, trade them during market hours. Tokenization chops them up, digitally speaking.
Chops them up.
Into smaller pieces, yeah, on a blockchain. So the big thing here is fractional ownership.
Ah, okay. So you don't need, like, $1 million to buy one.
Precisely. It makes these assets, which were historically kind of hard to get into unless you had a lot of capital, much more accessible. You could own just a small fraction of a treasury bond.
Got it. More accessible. And the source mentioned 247 trading. That sounds like a big shift.
Oh, absolutely. Traditional treasury markets, they have set opening and closing times, like Wall Street hours.
Right. 9.30 to 4.0 Eastern, that kind of thing.
Exactly. But because these tokens live on a blockchain, well, blockchains don't really sleep. So theoretically, you can trade them anytime, day or night.
Which means faster reactions, more efficiency.
That's the potential, yeah. Continuous trading could definitely make the market more efficient, more responsive to, global news happening overnight.
And Superstate is the company kicking this off.
That's the one mentioned in the source, yes. They're the ones launching this specific tokenized treasury product.
Okay. But it wasn't just them, right? I saw something about the Arbitrum DAO. That sounds significant.
It is, yeah. This is where it gets really interesting from a crypto perspective. The Arbitrum DAO, that's the community governing the Arbitrum blockchain network, they actually voted to back this.
Back it how? Like with money?
With a lot of it, actually. They approved allocating 35 million ARB tokens. That's Arbitrum's own cryptocurrency.
Wow, 35 million tokens.
Yeah, it's a substantial amount. It shows there's real support within the DeFi, decentralized finance community for bringing these kinds of traditional real-world assets onto the blockchain.
So the DeFi world is actively pulling traditional assets in. This feels bigger than just treasuries then, this whole asset tokenization idea.
Exactly. That's the broader trend. Some analysts are predicting, the numbers are wild, like $16 trillion in tokenized assets by 2030.
16 trillion.
Yeah. And that's not just bonds. Think real estate, stocks, commodities, art. Basically, anything of value could potentially be represented as a digital token on a blockchain. It could fundamentally change how we manage and trade assets.
Okay, that is huge. So the Superstate thing, it's kind of like a proof of concept for bridging TradFi, traditional finance, and DeFi.
I think that's a great way to put it. For TradFi, it's about finding new efficiencies, maybe lower costs, tapping into crypto liquidity. For DeFi, bringing in something like a U.S. Treasury adds, stability. And credibility.
Credibility? How so?
It helps attract more institutional money, serious investors who might be wary of purely crypto assets. But, bringing these worlds together also raises questions.
Like what?
Well, how do you keep DeFi decentralized if big TradFi players come in? How do you align the incentives? It's not totally straightforward.
Right, potential growing pains. So let's bring it back to you, the listener. Why should you care about this specific development? What's the takeaway?
I think it's a really clear signal of where things are potentially going. You're seeing firsthand a major step in blurring the lines between traditional finance and this new digital decentralized world.
So understanding this helps you understand that bigger picture.
Absolutely. It's about seeing how assets might be handled in the future, how technology is changing finance, and it could point towards new areas to learn about or even future investment trends.
Okay, so let's wrap this up. Key points. Tokenized U.S. Treasuries mean easier access fractional ownership, plus the potential for 247 trading.
Right. Big change from the old ways.
And we saw significant backing from the Arbitrum DAO, showing DeFi is keen on this.
Yeah, strong community signal there.
And it's all part of this massive potential trend asset tokenization that could link TradFi and DeFi.
Precisely. Broader access, more efficiency, and these two financial worlds starting to converge.
So what do you think about all this? Here's a final thought. If predictions are talking about $16 trillion in tokenized assets, what else gets tokenized? Real estate? Art? private equity? And maybe more importantly, how does that change your relationship with finance down the road? Something to keep an eye on.
Definitely something to watch.
Thanks for joining us for this deep dive.